Thank you for checking out crypto.chartguys.com, the source for technical analysis in the cryptocurrency world. We are proud to announce our own crypto alert system designed to give you the most critical technical trading information possible no matter where you are. Keep your eyes on the market with mobile or email alerts for MACD crosses, RSI levels, and even inside bar alerts for dozens of coins across multiple exchanges. New features and proprietary ChartGuys indicators are already in development. Our alert system is very easy to customize and utilize, so don't hesitate to sign up for the most effective crypto trading tool on the market at crypto.chartguys.com. Hey everyone, hope you're doing well out there in the cryptocurrency space. We're going to be looking at the big three and then EOS BTC, which had a nice pump. The bears are still in control of the market overall. Very short-term bounces, which means if you're playing bullish, you need to lock in those gains very quickly. Going to also be talking about the markets a bit today because, as you may know, I trade markets, trade everything. And right now the opportunity is in the stock market. It's not in cryptocurrencies. So that's where we have been trading. But also, you know, the big question is everybody's wondering how the cryptocurrency sector is going to fit into the global macroeconomic scale of things. And we don't really have an answer to that right now. So I'm going to point out things that I've been looking at. I've been trading the S&P 500 and, you know, individual stocks the last couple of days because the volatility is through the roof and the opportunity is so much more than in the cryptocurrency space right now that, again, it's just not trying to force trades in a vacuum, so to speak, a tight range, when we have huge volatile ranges and lots of big moves to be looking at in the market overall. So I got to give a shout out to members Atan and Easy and Julian and people that are shifting from cryptocurrency. You know, they've got a firm grasp on the technicals and they're shifting from cryptocurrency to trading options and trading stocks and definitely learning as they go, and they're making mistakes and they're having victories and it's the whole process. But got to give props to the people that are taking that venture out to, again, open their world up. The goal is financial independence, and to be able to have many different avenues of opportunity that you can look to is very big. So that doesn't mean, you know, if you're just learning charts, don't jump and get in over your head. Take your time. This is a marathon, not a sprint. In the next few years, you can set yourself up much better off financially. Just in terms of knowledge, I'm not even talking about making big gains in the next 3 years. Just get the knowledge and the experience down in the next 3 years. Then you have the next couple of decades to worry about those gains looking at these different markets. So let's start it off by looking at SPY. And here's where SPY was when I started trading cryptocurrency back in mid-May. And SPY was just doing its thing of blue sky breakout, all-time highs, insane huge run on the backs of the momentum of Trump getting elected. The stock market really liked that. So at that time, I'm saying, all right, we're not going to get any kind of visualization or any idea as to what the cryptocurrency space, what its role is going to be in this global macroeconomic market if the stock market is just running up like this, because nobody has any incentive to take their money out of stocks. In fact, they have incentive to keep putting money in because it keeps running crazy. So I was looking for weakness to get some clues. And now here we are over the last couple months, and the volatility and trading opportunity is just through the charts, off the charts, on the charts right here, but you know what I mean. So here, look at the daily range of these candlesticks on the way up, and now look at the ranges that we're getting. This is a day trader's dream of volatility, and the whole way we were saying, you know, we just want some volatility to be able to trade because there were a lot of boring days mixed in there. Not so much the case anymore. But what it also shows is weakness, and we pulled back 10% from the highs, and we're not seeing money enter the cryptocurrency space. In my opinion, we're not going to see money enter the cryptocurrency space until there is regulation and until these exchanges are more legitimate. It's a very simple hurdle that so many people from the stock market world are not going to go onto these exchanges, and it's because of the lack of security. Not only, you know, I know it's easy for millennials to get this two-factor Google Authenticator and all these security measures, and it's simple, and write down their codes, and they get it. But I promise you it's a lot harder for someone who's been doing this for 30, 40 years the same way, and now they all of a sudden have to change, and they're going to be putting their money into this extremely volatile asset, and these exchanges can get hacked and they can lose. And I just promise you that it's going to take regulation for money to come in, big stock market money. Now, some people don't want that regulation because they want the technology and the blockchain, you know, platform to all be free and open. That's perfectly fine. Some people want regulation because they want better trading opportunities and they want more money to come into this sector. In my opinion, The success of the blockchain technology has nothing to do with the price level of these coins. These coins could stay stagnant within a 10% range for the next 5 years, and that's not going to change anything in my opinion. In fact, that would probably be welcomed as it would be more secure, and you would see people use it as a safe haven asset. So gold is the safe haven asset. When the dollar is weak, when the market is weak, gold goes up in general, and just the last 5 days we've been seeing that. And what I want to zoom in on now is gold on the monthly chart. Look at how huge of a run this was. For gold to go from 2002, we were at $300, and we ran up to $1,900, over 600% in 2011. So 9 years, huge run. Obviously, I'm comparing it to the Bitcoin run, but it happened a lot slower. So 600%, not nearly as many gains percentage-wise, and it also took a lot longer. But again, it is such a more significant asset in terms of market cap. There's way more dollar value in gold than there is cryptocurrency. So we got extended, we consolidated, we formed our lower high, and then we pulled back significantly, and we went from 1900 all the way down, and we gave back about 45% of that move. Then we look at the Bitcoin weekly chart. We have the big bull move, we have our lower high, and we continue to pull back, and we're giving a lot of those gains back. So just wanted to highlight how gold, got really overextended as well. It pulled back for years and years. At this point, gold was pulling back from 2012 down to 2015, a 3-year consolidation period. Now we have our higher low, and the bulls are trying to get a higher high with a break of 1375 for a significant bull break. And if the market weakness continues, we're going to look for gold to do that. So there are clear signs that gold is, not only is it in a strong uptrend overall, it's reversing its momentum, and just in the short term, it's seeing some bullish action due to the market weakness. And the bottom line is we're not seeing that in the cryptocurrency space at all. Could you imagine, there's definitely hedge funds involved in the cryptocurrency space, and they are the first movers. They are the people like us as the traders who are already in it that are jumping in on things when they're still a little bit sketchy. When I first purchased my first Ethereum, I clicked the button to put money on Coinbase, and I instantly said, that money's gone. I'm not even thinking about that money anymore. I just lost all that money. And that was to be in the psychological headspace of being in this new space that is much less secure than something like Fidelity or somewhere where, if you were to get hacked and the money were to get sent somewhere, it would have a bank account linked to it, and there would be ways to track it down. But it's just, I cannot stress enough how big of a difference this is from something that so many people are used to trading in the stock market for decades, and it being, the same way and the same security, to jump into this space and to put some money into the most volatile asset in the world right now. It's not really what many people want to do. It's the only high risk, high reward people in this game at this point. So let's get into the regular analysis. Let's start with the daily time frame for Bitcoin. Bulls are still trying to hold the recent low of 7,310, and they still can. The low of the day right now is 7,757, but they better get going sooner rather than later, because if we lose this low, there's a lack of support until the recent low back at 5,873. So I would anticipate a bounce before 7,310 breaks, but it's likely going to be a lower high, if anything. The odds that the bulls are going to be able to bounce from under 8,000 back to 9,174, without some kind of catalyst, it's not really likely at this point. So if we do get a bounce going, we'll be watching for the potential of an equilibrium pattern with a lower high on the daily forming. But if you look at the 4-hour time frame, we still haven't changed any trend right now. And we had the bounce yesterday where we saw the potential news reaction, a little bit odd, but we saw that surge that did not last long. And we saw that up at 8,250. We then saw a bounce attempt today when an inside bar broke bullish on the 4-hour. Didn't make much ground up. We got 8,129. And now we have a higher low. So there's a couple lower highs on the 4-hour, and there was one higher low. So if we look at that on the hourly time frame, we have our high of the bounce attempt with that news. We have our low, lower high, higher low. The range I'm watching into tonight, 7,835 with resistance of 8,129. The direction that we break this channel, as we're right in the middle of it, is going to likely dictate the direction of momentum tonight. If we see a bull break, we're looking at 8,250, and we'll be looking again, the target for the lower high on the daily would probably be somewhere around 8,500 or so, which would be right in the middle of the current low of this consolidation the last few days and the recent high. So what happened since I last spoke and you last listened, this is, everybody's talking about manipulation and whining about it, And yeah, sure, it's frustrating. It's a pet peeve of mine where, you know, the stock market world and the penny stocks, everybody always whines about shorts. The reason we're going down is shorts. No, the reasons you're going down is because of a terrible company with poor debt structure and convertible debt. But it's a scapegoat. It's a scapegoat that's very easy to blame. There's manipulation in cryptocurrency. There's no doubt about it. But there was manipulation on the way up. You think that price action from, you know, 1,000 to 20,000 is normal? No, that is manipulation. So you have to take it at both ends here. It got ran up on manipulation in a huge way, and now profit was taken, shorts were entered, and now they're manipulating it back down. But this is just creating some volatility. You know, nothing's going on, and we want some trading opportunity. Let's run this price up in 15 minutes, trade sideways, and then dump it back down. It's just a clear, you know, that is not normal price action. And you could say it was the news, but the more it looks like it, you know, it's just a bunch of orders being triggered and shorts having to cover, and then again, just an all-out dump right back to lower than where we came from. So I took my profit. I had a small position when I did the video yesterday. I took my profit on this bull move, and I didn't look back because, again, while we're in a daily downtrend, if you are making bullish gains, I don't care what the size of them are, you're doing well. You're ahead of the game. And that's where we stand. I've just been making really small gains. You know, back a few months ago, I'm making 10% of a really solid trade than I was a few months ago. But I'm perfectly fine with that because it's more money than yesterday, and that's the goal. Just continue accumulation and continue to prepare for when the bull trend, you know, does turn things back around. Otherwise, you're playing bearish and having a really good time. So that's what we're looking at in the manipulation zone. So yes, there's manipulation. It's going to cause the price to go down, and it's going to cause it to go up. And as long as we're not regulated, it is a part of the game. And, you know, it's definitely, I'm very curious to see how it could ever possibly be regulated because the SEC has its hands so full in the stock market. It has nowhere near enough resources that it needs to, you know, properly cover this space. But I can't even imagine the task of what it would be for cryptocurrency. Perhaps just a few exchanges, and then we have unregulated exchanges, and it's very interesting to watch it all develop. So let's get into Ethereum. Ethereum is still extremely weak. The daily time frame RSI is getting down into the low 20s. We already broke our low. It's a lower low already. Ethereum living up to its hype of being the weakest name of the big three for weeks and weeks at this point. And the next support level, let's see, let's actually look on the daily. Next support level is the price going all the way back to December. 438 is the next support. Very clear, lower highs, lower lows, 4-hour time frame. Trying a bounce right here. Same thing as Bitcoin, trying a little bit of a bounce. Still a lower high pattern. And looking at the hourly time frame, we have our clear lower high of 472.20. That's resistance. And the bulls just formed a higher low of 453.68. So that's the range that we're watching into tonight. And same thing, we're right in the middle of that range, and how this range breaks is likely going to dictate momentum overnight. So clear bear break on Ethereum. Even if Bitcoin does form a higher low, Ethereum is still beat up. Litecoin is down on the daily, testing its low, 137.12, 138.15. So double bottom essentially. So we have Bitcoin with a higher low clearly, Litecoin with essentially a double bottom, and Ethereum with a lower low, continuing to follow the pattern of who's strongest and who's weakest. 4-hour time frame on the Litecoin bounce attempt, still weak, but it's the same thing on the hourly time frame. Looking at our support and resistance and our channel overnight, we got support at 138.15, and then we're looking at the resistance of 146.18. And again, we're right near the middle of the range, and we're watching to see how that breaks to dictate some overnight action. So that's where we stand overall. The trend belongs to the bears right now, unless we change this 4-hour trend and break some of these resistances on Bitcoin on the hourly time frame. If that is the case, we will look for a move back up into the mid $8,000 range for a daily equilibrium to begin playing out. EOS BTC weekly time frame pulled back for a couple months, bullish reversal candlestick, bulls trying to follow through, and this really all just happened on we had a couple days of bullish action. We consolidated, we formed a higher low, which is now the must hold level of 671, and then the bulls had a big move today. And if you look at this big move, it was very quick. Let's look on the 5-minute time frame, where we just shot up like a rocket. And I heard of a lot of shorts that got stuck in this, and a short squeeze went off, and you know, a lot of people lost a good amount of money as we ran up over 10% very quickly. But this all played out in about an hour, just over an hour. Here it is on the 15-minute time frame. So about an hour from the breakout to the top, volume climax signaling the top, inside 15-minute bar bear break and just consolidation. We had a little equilibrium pattern and then a bear break. But the bulls are not giving up. We have a new support level. The low of this consolidation, 7.4 essentially, just rounding a little bit. So 7.4, we built a base of support there, and we're now looking at resistance of 7.746. So overall, big bull move. Let's check it out on the hourly. Could be looking for an hourly equilibrium with our high, low, maybe a lower high here, and we'll see if we can form a higher low compared to 7.4. So overall, very bullish move. Bulls trying to follow through with some continuation. The daily time frame did get that higher low, but we don't have the higher high yet until we break 8147. So we do have to break that level on the daily time frame to significantly change this trend and get follow through. We don't have that just yet. So healthy consolidation after the breakout, currently ongoing, but we need another leg up for this daily resistance to break. So that's where we stand. I appreciate you all tuning in. Again, I'm constantly monitoring the market every single day when I'm doing the live streams for the chart guys. I'm looking at all the stocks and all the markets and the correlations. So I am constantly looking for the correlation. I watch 5-minute charts all day, and I'm watching very close. And I will certainly let you all know if I see anything, but at this point, I just don't. So today's Do Good Things, we're going to give a shout out to pollinators out there. And really something I experimented with last year. I've always not been a fan of mowing lawns and trimming bushes and just this stuff that seems like such a waste of time. Why are we manicuring our lawns because it looks nice? Says who? It's right up there with wearing a tie. Who says that putting a piece of cloth around your neck makes you look like, why are we doing that? It's uncomfortable. Anyways, so pollinators, one thing that I experimented with last year is saying, hey, there's a big yard of manicured grass back here. Let's dig it up and throw a ton of just wild pollinator flowers down. And so that's what we did. And this is the video of it here, where we just had dozens and dozens of different varieties of flowers, and the amount of pollinators and butterflies and bees and hornets and every single kind of insect that you can imagine, the amount that it attracted. I mean, this was my walk every day, where I would go from the house, and I worked out in a shed when I started the Chart Guys a few years ago. That's a story to be told in a book someday. But I ran internet and power out to a little shed that you would keep your lawnmower in because there was too much noise in the house to do live streams. Anyways, that was my walk to the shed. There's the shed right in the back there. But that was my walk every single day. And I didn't have to do anything but throw seed down, water it a couple times to get it started, and then that's just what it did. And, you know, someone might say, oh, that's an overgrown yard. It looks terrible. But what it does for the ecosystem and the surrounding area is you can't match it. It's just a feast of food for pollinators, especially if you want your crops to be pollinated for seeds. So that's the point. Getting excited for spring. It's getting close. Thanks for watching. Have a great night.